You're listening to the Financial Source podcast on YouTube.
Welcome to the deep dive. So we're looking at a really bizarre disconnect in the global markets today.
It's a classic split screen moment, isn't it?
It really is. I mean, if you look at the U.S., it seems like everyone's just gone on holiday. The markets are flat, just holding their breath.
But then you look internationally and things are moving and moving fast. So our mission today is really to figure out why. Why is the rest of the world making these big, aggressive bets while the U.S. seems, well, paralyzed?
Let's start with maybe the most aggressive bet in the whole stack. Alphabet, that's Google's parent company, just issued a sterling bond.
Right, debt in British pounds. But, you know, the currency isn't the real headline here.
Not at all. It's the maturity date. This is a 100-year bond.
100 years. It matures in 2126.
Which is just, it's wild. I mean, most corporate planning cycles are what, 3 years? 5 years maybe?
And this implies Alphabet thinks it'll be solvent a century from now. And the market agrees, you know, there were plenty of buyers.
So what does that signal?
Well, two things, really. First, extreme confidence in big tech as a permanent part of our civilization. And second, a real hunger for duration. Investors want to lock in returns for as long as they can.
That desire for long-term safety, it really tracks with the other big outlier we saw, gold. It's finally consolidated above $5,000 an ounce.
That's a huge psychological milestone.
Yeah.
Gold is the classic safe haven, right?
Yeah.
It's where money hides when people are worried about currency devaluation or geopolitical risk.
So seeing it park itself above 5,000 tells you there's a deep anxiety under the surface.
Exactly. And that brings us to the political landscape, because that anxiety is playing out very, very differently depending on where you look.
Let's start with Japan, where the market is actually celebrating.
They are. Prime Minister Takaichi's LTP landslide was the trigger. You know, markets absolutely hate uncertainty.
And that election gave them clarity.
A clear mandate. So now you're seeing expectations of fiscal discipline, which lets the Bank of Japan normalize policy.
And the reaction was immediate. The yen got stronger, and the Nikkei hit a fresh record high.
It's a perfect example. Political clarity equals market alpha. But then you flip over to the UK, and it's the
complete inverse.
Total inverse.
Yeah.
Prime Minister Stármer is fighting for his political life with this whole Mandelson saga. The FTSE 100 dropped, and then it was dragged down even more by BP missing its earnings.
But here's a nuance I found really interesting. While the UK stock market is struggling, the bond market, it held up. The gilt auction saw really strong demand.
That's a crucial distinction. Equity traders are selling the political noise. But the debt investors, the people buying the gilts, they're still confident the UK government is good for the money.
So the political drama doesn't always crash the entire system.
Not at all. Just the parts driven by sentiment.
Meanwhile, back in the US, we don't have drama or clarity. We just have waiting.
Paralysis. That's the word. U.S. equity futures are flat because nobody wants to make a move before the big data dump.
Right. We've got the employment cost index, retail sales, and then the big one.
Non-farm payrolls.
And for you listening, that's the key report on how many jobs the U.S. economy added. It's what the Federal Reserve uses to decide on interest rates.
Exactly. So until that number comes out, the big institutional money is just sitting on the sidelines. And it's compounded by the geopolitics.
Of the wait-and-see mode.
Yeah, the Trump-Xi meeting still isn't finalized, and now you have French President Macron warning about a rift in EU-U.S. relations.
And that uncertainty bleeds into commodities, too. Natural gas is dropping because of warm weather, but oil Brent crude is just stuck.
It's stuck near $69. It's caught between potentially weak demand and the fear that some geopolitical event could cause a price spike overnight.
It really is a world moving at different speeds. You have daily political shocks in London and Tokyo.
A data dependency paralysis in Washington.
And in the background, Alphabet is quietly planning for the 22nd century.
That's the takeaway for me. We spend so much energy dissecting the monthly jobs report or the daily political scandal.
But the biggest players in the room are making bets on a 100-year timeline. So it really begs the question, are you letting the noise of the moment distract you from the signal of the century? Thanks for listening to The Deep Dive.